Hello, my name is Brad Rosley. Thank you for attending our webinar here today. Today's topic is the solo or individual 401k. In my mind, it is the answer for the self-employed as it comes to their retirement planning. This is a great vehicle. It's available to anybody that's a sole proprietor, independent contractor, anybody that's self-employed. This is great for realtors, professionals that have their own business, hairstylists, general contractors, salespeople that are independent contractors. Anybody that runs their own business is going to love this plan for a retirement savings vehicle. My company is Fortune Financial Group. I'll give you just a brief overview. I'm in Glen Ellen. I'm on Roosevelt Road. I've been doing this for over 25 years. I do specialize in retirement planning and investment management. I'm an independent person, independent business, so I don't have any allegiances to any products. I work on a fee basis, and I look at my clients and take advantage of their best interests all the time. I am a fiduciary for them, which means I always put their interests first. Today we're going to talk about a number of key areas regarding this solo 401k. We're going to talk about the plan limits, the advantages of having a solo 401k, and also look at some frequently asked questions and tell you how you can get started here today. As a self-employed person, you know that it's tough to set aside sometimes for your own retirement. Most of your money oftentimes goes into your own business, but it's a fact that fewer than 2 out of 3 self-employed people believe they're going to have enough money to ever stop working. And I want to help you figure out a plan to make sure that you do have enough money. Some factors that go with that you need to be considering are the fact that most of the people, more than half the people surveyed, have not even taken the time to figure out how much money they may actually need for retirement. So that's where we have to start. How much money would you actually need? A lot of people are dependent on Social Security right now for their retirement. It makes up the lion's share of their income. However, Social Security Trust Fund is on its way to being broke in the next 20 years. And that's because there's a fraction of the people paying into the system as compared to those people that are pulling money out of the system. So there's not enough money going in to support all those people that are taking money out. And this situation is going to get much worse as the baby boom generation all starts drawing down on Social Security. Studies say that most financial planners will tell you 60 to 70% of your pre-retirement income is what you want to have for during retirement. So it's going to take a lump sum of money that's pretty substantial to supplement Social Security for most small business owners to replace their income. Some retirement plan limits for this year, starting with the 401k. Whether you work for a large employer or you want to do the solo 401k, the limit for the 401k salary deferral is $17,500. That comes directly off your income. If you happen to be age 50 or over, you can take out another $5,500, bringing that total to $23,000. In addition to that, for the solo K, you can have either profit sharing or what's called a SEP IRA plan on top of the 401k that allows you to deduct 25% of your income, bringing the total amount of money that you can use each year to fund into your plan to $52,000. If your spouse happens to work with you in the same business, then they can also make a contribution to the plan. So for example, if you have a spouse that does paperwork for your business and they make $10,000 a year, you can put the whole $10,000 that the spouse makes into her own or his own 401k plan. That's 100% of income up to $17,500 or $23,000 if you're 50 years or older. A couple benefits of the 401k. You can choose a traditional 401k where the contribution is 100% tax deductible. So for example, if you make $100,000 and you put away $17,000, you're taxed on 100 less than $17,000, or you're taxed on $83,000, not the $100,000. That's a salary deductible plan. While the money's inside the 401k, it grows tax deferred, so you don't pay taxes, it grows. However, when you take it out at retirement, you are taxed at ordinary income rates when you take that money out. keep in mind that you need to keep that money into age 59 and a half. If you pull it out prematurely, there's also a 10% IRS penalty. You may not have heard of the Roth 401k. It's very similar to the traditional 401k. As far as the contribution amounts, they're identical. The difference is that when you look at your 401k statement, and under a traditional plan, whether it be an IRA or a 401k, if you say at retirement you had $1 million saved up, that $1 million is really not all your money. There's a surrender value to that account. The surrender value is dependent on what share of that $1 million the government, the IRS, is going to take as you take that money out. So, for example, if you're in a 28% tax bracket, the government would be taking 28% of your distributions, and you'd get to keep 72%. So the $1 million is really $720,000 on your side of the ledger, and $280,000 is the government's. With the Roth, it works a little bit differently. With the Roth, when you make $100,000 and you put in $17,000 into your 401k, you do not take the tax write-off. So in that case, you're still taxed on the whole $100,000. Why would you do this? Well, the money also grows tax deferred, so it may one day grow to be $1 million, just like my other example. But now when you see $1 million Roth 401k balance, that whole $1 million is your money. There is no government split at that point. So it comes down to, am I better off taking the tax write-off when I make the contribution or when I take out the distribution? And that depends on an unknown income tax rate when you go to take the money out. Personally, I'm very concerned about what tax rates might be in the future. We have a ton of entitlement promises that have been made and are increasing, and we don't have any money as a government to fund those promises. So I'm very concerned about future tax rates. If you're less concerned about those, then you might be better off with the traditional plan. We can certainly talk about that in your situation, because every situation may be different. The third major benefit that I see on this solo 401k is that the costs are extremely low. With a traditional company-sponsored 401k, the costs are very high, several $1,000s every year. That's because the government's put in all kinds of ERISA and discrimination testing laws, and they look at a number of different things in these programs that cost a lot of money to file the paperwork just to keep in compliance with the laws. Most companies have to hire a third-party administrator to do this work for their firm. It can cost anywhere from $3,000 to $10,000 a year in many cases. With the solo 401k, you can do it for less than $100 a year. Oftentimes that cost is down to zero when it comes to all the filings. So it's very, very, very affordable. A couple other key points at a glance. I want to remind you that businesses with no employees other than their spouses are the ones that can do this. If you do have an employee, it's fine as long as they're part-time, or if they were under 21, or if they work less than 1,000 hours. If they don't get a W-2, they're not an employee. So those people you're able to have part-time people or independent contractors possibly work for you and still do the solo 401k. You have an incredible flexibility on the contributions to the plan. You can put in anywhere from the maximum all the way down to zero. So if you're in a business where your income fluctuates quite a bit year to year, and you're not comfortable making a locked-in contribution amount, you don't have to worry about that. If you have a down year, you can put in zero. That's not a problem. If you have a great year, as I said, if your income justifies it, you can put up to $52,000 into the program. To get to the $52,000, again, it's $17,500 is a 401k, or $23,000 if you're over 50, plus the extra amount on top of that would be a separate profit sharing contribution, which is 25% of your eligible compensation. Put them together to $52,000 is the maximum. The money's in the plan immediately. It's vested right away, which means it's in your plan working for you. You could take a loan against it up to half of the balance, up to a max of $50,000. If you'd like to simplify your life and include your other IRAs into the one plan, you can roll your other IRAs into the same plan so you have all your money in one place. You have to have the plan established by the end of the year. So you always have time to get that done. The funding does not have to be done until your tax filing deadline date. So if you got it done at the end of this year and you have the money available, you could wait till the following year. As long as you put the money in before your tax filing deadline, you'd be okay. There is no discrimination testing or top-heavy tests like there are in the traditional larger company 401k plans, so you don't have to worry about that. There's no real government reporting until your assets get over $250,000. This plan is really fantastic for small business owners. I really hope that you take this seriously and look at these numbers here. It's incredible. The amount of money that you can put into this solo 401k compared to your income is far better than anything else that's out there today. If you look at the bottom number on this sheet, if you made $5,000, you can put in a whole $5,000 as a 401k contribution. Some of you may have SEP IRAs right now. If that's the case, you could only put in $1,250 or 25% of the $5,000. Going up the scale, look at $50,000. You get $50,000 income, you could put away $12,500 in a SEP plan, put $30,000 into this plan. So 60% of your earnings you can put away into this plan, and it's legal, and the plan doesn't really cost you anything at all to start up. So this is really a great opportunity for anybody that's self-employed. I started one of these 10 years ago, and it's going to take care of me in retirement. I couldn't be happier, and I have a number of clients that are doing this plan right now, and they love it. So frequently asked questions, what types of businesses are good candidates? Again, self-employed people. I'm a CFP, and I have one. I know doctors that have them. I have lawyers that have them. I have realtors that have them. I'm going to have hairstylists that have them, too. I found out that's a great opportunity. Anybody that's self-employed, if you're in sales and you don't get a W-2 and you're self-employed, you can do that as well. The solo K is different than the 401k in that the tax filings are not there. So you don't have all the expenses. That's the major difference. What happens if you start up a business and then you add employees? Well, you can either potentially go to a more traditional 401k plan, or you can easily just shut down the plan, take your money out, and roll it over to an IRA and move forward. There's other plans you can use then if you do have a couple of employees that may be more efficient than this one. You can begin contributing as soon as the ink is dry and the paperwork is in the plan, and we have it, everything is set up. You can make this a Roth 401k or a traditional 401k. You can both participate in the business. You can take loans if you need them, and there are very low fees associated with the solo 401k. One last thing I'd like to mention, it's really my mission to help people with their retirement program. I found that most people are in really bad shape when it comes to saving for retirement. Even those that think they're in pretty good shape, when we run an analysis of what they may need for retirement, are not in as good a shape as they'd like to be. I started by writing out a free report on retirement planning. It talks about all the issues you're facing today. It's on my blog page, which is lifeplanningtoday.com, www.lifeplanningtoday.com. You'll see it on the right-hand side of the page. Just click on it and put in your name, and it'll send it right out to you, or download it right on the internet for you. And I'd love you to take the opportunity to read that and share this with your friends and coworkers. As I said, I'm in Glen Ellyn. The way I operate is to give people a free initial consultation that we can talk about this plan or other parts of their retirement planning or investment planning and see if it's a good fit for you and I to work together. It's no obligation meeting. Just like downloading that free report, there's no obligation whatsoever. You can find us on Facebook and Twitter and LinkedIn as well. On 800 Roosevelt Road, which is in Glen Ellyn, just west of 355. If you're interested in just getting the question answered, feel free to shoot me an email as well, brad@fortunefinancialgroup.com. Thank you very much for listening. I hope you take advantage of this great plan and share it with your friends and coworkers. Have a wonderful day.